A glance at financial indicators will reveal that the South African rand has shown some stability against major global currencies, with some positive gains over the euro as well as the Australian dollar. Now, current stability might seem like something that only economists and maybe large investors or bankers are supposed to know. But in reality, this affects all of us. Imagine then going about your daily life, not worrying about unpredictable price hikes that you might face on a daily, or your savings losing value overnight. That's the power of a stable currency. In this video, we are going to dive deep and focus on why current stability is important for you. So stick around to find out exactly how the stability of your local currency will affect you as an individual, your business, as well as your economy. You really don't want to miss this. Welcome, I'm Kenneth, and this is Friday Money Matters, this Friday and every other Friday on this channel. And thank you for tuning in. Please do help the channel with your subscription, like the videos as well, share with your friends and families. Thank you so much for tuning into this episode. The value of a currency is always relative to another. This basically means that you cannot ascertain the value of a currency without comparing it to another. So in the case of the rand, the value of the rand is always relative to another currency, for instance, the dollar, the pound, and so forth. Therefore, all the values that you see of the rand is always based on how does it fare in comparison to another. Now, in this case, what it basically means is that there is a difference in demand of the two currencies. For instance, if one currency is stronger than the other, it means that that other currency is facing more demand than the other. For instance, the US dollar is valued higher than the rand. Basically, it means that South Africans, citizens, businesses, and the economy as a whole demands more of the dollar than the Americans demand the South African rand. Hence, the dollar being more stronger than the rand. Now, in this last week of December 2024, the values of the rand against the major currencies as follows. The South African rand versus the US dollar is at 18.56, which basically means that to purchase $1, you will need 18 rand 56 cents. Now, against the pound, it is at 23.29, which means that one British pound will cost you approximately 23.29 rand. Versus the euro, it is at 19.29, and against the Japanese yen at 0.12, and the Australian dollar at 11.58. So basically, these are the major currencies that we are focusing on in this particular video. The major currencies are basically some of the biggest trading partners with South Africa. So basically, if we're talking about the value of the rand versus the Australian dollar, what it means is that there are a lot of things that we're demanding from Australia than the Australians are demanding from South Africa. Hence, the value being stronger as far as the Australian dollar is compared to the rand. So this basically means that trade in this case is favoring the Australians rather than the South Africans. There are more goods and services coming in, or value coming in from Australia, than what South Africa is exporting to Australia. Therefore, it means that the Australians are demanding less of the South African rand. So basically, that is what a currency exchange is all about, which is the value of, or the volume of trade between the two countries that are paid there in that particular instance, the rand against the Australian dollar. But as I said earlier, this video is focusing not on the technical part of how the value is generated, but we're looking at what benefits would you have as an individual, as a business, as well as the economy. Now, in this case, looking at South Africa, this does not basically mean that the stability of the rand and will face different benefits than the stability of any other currency. Now, in your local settings, whatever your currency might be or whatever nation might be, these benefits would translate to you if there is a stable currency. So whether you are in Botswana, whether you are in Angola, Namibia, Zimbabwe, Zambia, Malawi, Canada, wherever you might be, the stability of your currency will produce almost the same benefits as what the South African rand is producing for the citizens of South Africa. What we have seen as far as the benefits to the citizens of South Africa is this. Now, a stable rand basically means there is predictability. Now, predictability is key, especially if you're dealing with finances. A predictable rand means that budgeting and financial planning becomes easy for individuals. What that means is, remember that a budget is a financial plan. You are focusing on how you are going to raise income and how you're going to spend it. So if you've got a stronger, or if you've got a stable currency, what that basically means is that your planning is going to be even easier. It means that what you have set as your financial goals in future, there won't be that much variations because of a stable currency. What you predicted in your financial plan, it will still come out as close as your predictions were because of the stability of your currency. Now, the other benefit that you notice there is that there are less swings as far as the cost of imported goods. Now, South Africa, and as much as a lot of other countries in Africa and so forth, especially developing countries, depend a lot on imports. Now, a dependency on imports means a dependency on the currency of another nation. So the stability of the local currency basically means that it is easy for you and them to plan for purchases. Okay, for instance, a lot of people are involved in e-commerce. You're buying a lot from these online shops, from Temu and so forth. You have noticed then that because of this increase in e-commerce, a stable rand then makes it possible for you to plan your future purchases. If you're planning for maybe your Christmas shopping, whatever you have been putting aside to buy that particular item, it means that every time of the purchase, be it a month later, 2 months later, the price of that particular product would not have fluctuated that much. This is because there is a stable currency. So a stable currency makes it easy then for you to plan for all the purchases that you are buying from other countries. So imports then become a sort of easy to plan for, and this is quite good, especially if you're depending a lot on those. The next benefit is that your savings and your investment will hold value over a long period of time. Now, if a currency is stable, it means that whatever you have invested, for instance, you have invested in other countries, you are buying on the US or stock exchanges, on the New York Stock Exchange or NASDAQ, you are investing there. Whatever you have invested, if your currency continues maybe to gain, it means that what you are getting is less. But if it loses, then maybe you're getting more. However, you cannot bank on these swings. A stability then becomes a key for you to plan your investments and to plan your savings properly, because you know that the value that you're going to get is predictable, and because it is predictable, it is easy then to plug your investments. But in most cases, this is seldom the case. However, as we have seen in the past few months, there has been stability of the rand, but the reasons for that are something that we're going to talk about in the forthcoming videos. Now let's look at benefits to businesses. Again, stability is key, is gold, especially as far as businesses are concerned. First and foremost, you'll find that businesses can invest and plan for the future without taking so much consideration on currency fluctuations. Now, this is very important, especially as far as stability of consumer prices. Now, a stable currency ensures that you are able to give your consumers products at stable pricing. There is not much fluctuation in your prices. If that is the case, then your consumers can plan for their purchases better, and therefore this ensures that you've got a sustainable demand over time for your products. So consumers will always go to something that they know is predictable. Now, if your prices one day is going up and the other day is going down, consumers might be looking for substitutes where they can get it at a relatively better price. Again, a stable currency ensures that businesses can now peg or have more predictable growth margins. A lot of businesses already are importing a lot of imports, and all of these are put into or factored into your costing. Now, if you're factoring into your costing, it means that you also need to factor certain margins which affect your price. Therefore, in your financial plans or in your business plans, then planning for future growth can be a little bit problematic if there is a very unstable currency. So a stable currency ensures that in the long term, you can plan your growth margins and you are safe in those margins because you know that there is stability in your local currency. And this is very important, especially if you've got a lot of imported resources. The next benefit is it becomes easier to attract foreign investors. Now, foreign investors are more likely to invest in a country or in businesses that exist in a country where there is a stable currency. This ensures that in the long run, whatever investments they put into the businesses in South Africa, they are able to predict what those investments will bring. So you are looking at return on investments. How much are you expecting? At the time of entering into that investment, already there are projections, there are expectations that these investments will bring this much as return is concerned. So if there is or there are a lot of fluctuations, it means that it is very unpredictable. You might even lose whatever you put in there, or the value of your investments in the long term might go down because of an unstable currency. Finally, let's look at the benefits on the economy. Now, one of the most important benefits on the economy of South Africa and any other country that has a stable currency is economic confidence. Now, economic confidence in most cases is what drives the economy. Now, the economic participants of that country are bound to be confident in their local economy if there is confidence on the economy. Now, fluctuations or a lot of volatility in the local currency reduces that economic confidence, and investors or participants are less likely to take a role or to invest in an economy where the currency is unstable. Now, the second thing is economic growth expectations. Economic growth plans and expectations will increase. As we said earlier, a stable currency will attract foreign direct investments, and this means that the economy has got a greater possibility, a greater chance to grow. If there's a greater chance to grow, it means that other issues then can be addressed, things such as unemployment and so forth. And there's a growth in industry, growth in revenue or income, gross domestic income increases, and if these factors increase, therefore even all the other economic aggregates will also increase, and as a result the economy prospers, driven by a more stable currency. Again, a stable currency fosters a more productive, a more encouraging, a more inviting business environment. So it means that businesses will put in whatever they have, or they will invest more because they're expecting that the stability of the local currency will play to their advantage. Now, there are a lot of examples in countries where there has been instability in their currencies. You have seen a lot of these examples across Africa where instability in the local currencies has affected business confidence, and in extension has affected how the economy performs as a whole. Remember, the economy depends on the economic participants, the households, the firms, on how they interact. Do they produce more? Do they consume more? As long as there is a stable currency, it means that they are confident in their local currency. So therefore, they will hold their currency. Holding on to their currency means that the demand for the local currency, like in this case, demand for the rand will increase. If that increases, then the valuations of the rands are quite good on the international market, and this always prospers a nation economically. I'm quite certain that I did not cover all the benefits of a stable currency. Please let me know exactly how you think a stable rand benefits the citizens of South Africa. How does it benefit you if you're an entrepreneur or you run a business? How does it benefit the economy as a whole? Please leave a comment down below and let us grow this discussion on this channel. Thank you so much to all the subscribers that have come through in the previous months, especially here in the month of November and December. We really appreciate your support for results-oriented preparation with Kenneth Phiri. Thank you so much. Thank you for 2024 and all the gains that we have achieved together, you as the subscribers and the channel. I hope you really liked this video. If you did, please give the video a thumbs up, share with your friends, and do subscribe if you have not yet subscribed. And we'll see you in the next video, and our next one will be in the new year 2025. Thank you. Happy and prosperous 2025. We'll see you in the next video. Bye.